Okay, I quite literally just sat down at my desk and I wanted to do an extensive review on the week. Bro, this fucking chair is actually a piece of shit. I need to get myself a new chair. Or maybe, okay. I wanted to do an extensive review on the week. So that's like within here, what I know, what I'm looking for, the loss I took today, um, and go over the win I took last week Friday. So basically, as of recently, I've been kind of like a bum ass motherfucker. Um, I've been waiting for like perfect setups, which, given the context, as context completely changes from day to day, aren't really even perfect setups. Um, and I don't know. I have to be a little bit more open minded going into every day tape reading in real time, just like I did on last week Friday, because that was helping me a lot. And I basically, like, I kid you not, I basically coasted through like a whole week. I mean, no trade, no trade, no trade. A possible trade I could have taken on Thursday. Wednesday there actually Wednesday there was a trade, and I can go over that too, even though I have a video already going over it. Um, yeah, okay. So let's start from the top, right? Um, where should I begin? Because there's so much crap I can just start yapping about, but if it doesn't mean anything in any context, then it's just a bunch of bullcrap. So, alright, let's just start off the week. Let's start off from Friday last week. So, um, Friday last week, and then let me also get Sarah Wave in here. So, yeah, this is so tough. Anyways, Friday last week, um, I took a long position and I quite literally caught the low of day, which basically means I caught the very furthest lowest price of the whole day, which basically is just a way to flex on your ability to capitalize off you being correct. So basically, what that looked like was this zero point 0.5 of this wick, which is a pattern, but zero point 0.5 of this wick, and that was aligned with this new day opening gap. So let me put that in a language that a normal person can understand. Um, you can you can look at patterns like fair value gaps like this 24/7, but within the lack of context, I mean, like, look, I guess you could say, look, right here we went lower off of it, and that's an okay way to tape read the market. And there is some sort of statistical advantage sometimes because the market continues doing what it's doing. And if you have a PD array supporting downward price and you get in a short, your trend is your friend. You're probably going to get in line with the trend. But at the end of the day, the reason these PD arrays or these stupid patterns are formed is because we have imbalances of volume. So understand that when we don't have these patterns, right, we have bullcrap choppiness, we actually are in a fair value. We're actually in an auction. And where the underlying term fair value gap comes from, even though it's technically not a fair value gap, but if you verify it with profile, it could be. The idea of fair value gap is we're in fair value, and as we're leaving it, we make this gap, which is basically a lack of consensus between buyers and sellers. And then, like right here, we failed an auction, which means we tried to get back into this, See, try to get back into this chop, but we failed to do so, and we went back into price discovery. Understand that either the market can be in a balanced state or it can be in price discovery. And when you're making fair value gaps, like drawing them out, most of the time, I mean, unless it's just some bullcrap pattern that you're, marking out with no given context, it's going to be price discovery. And trading in line with price discovery, I don't think is a bad thing. It's not how I look at the market, but I just wanted to point that out. So understand that when you're trading underlying patterns, you're really just looking at I don't want to say derivative. You're looking at a dumbed down version of what's actually happening within the market, which is, we're having an auction between buyers and sellers. And you can, take the derivative of that and look at the order book and drive yourself insane and, go down the rabbit hole. That's not what I'm here for. I'm here for money that makes sense. I'm not looking for quick and easy money. I'm looking for sustainable money that I can execute consistently on, because that's the only way I can actually extract money from the market, if I can consistently execute. So I know that's just a bunch of yap, and that's probably what I probably sound like an autistic rat going on rants, not actually getting anyone anywhere. And I'm afraid that's just kind of how trading is, because trading is something you see with experience and you develop an autism around it. But let's go back to what I saw on Friday. So basically, I saw that this gap, right, this volume imbalance, because of the way that we just freaking could not come to a consensus, we could not come to a balanced state. You see how we just shot right down? We come into this range, we reject off of it. And so we could not come into a balanced state. We made a gap, right? And wick is basically a fair value gap. I mean, I'm going to be so for real with you. It's like the same idea. It's the same consensus. It's a stupid ass pattern that doesn't mean anything without context. When you add some volume profile context to it, you can start to see that, hey, this gap, okay, well, maybe let's go back before this registered. But this gap is located, at an extrematory right here. And I'm looking at this and I'm like, hey, we have this here, and then we have, a ledge right here. And I'm looking at this, and the way that I draw out my profiles is from where the last confluence is made, right? So whether that's, from where the last confluence was made, I take the last auction from that. Because then I can see how the price has been reacting to those confluences, or has been reacting around those confluences from since they've been created, since they've been established. So I'm looking at this new day opening gap, right? All right, let's just get into the nitty gritty. Let's just go dumb. Let's go as dumb as we can. A new day opening gap is essentially a gap between where price opens for the day and the next day. So whatever the hell happens between 5 p.m. and 6 p.m. when the market is closed, whatever inside Ashkenazi Jewish trader that is, speculating on the black market and we're doing whatever in the Tel Aviv stock market exchange, putting whatever book and whatever dark order book, dark market, whatever, I don't even care. Whatever consensus happens there usually is a gap between price, because basically we just could not develop an efficient market. And that's, it's okay, whatever, it happens. I mean, sometimes there are ridiculous amounts of points and it ruins our day. But understand that we simply had an imbalance of volume. Why do I say that? I mean that now that when we open this gap, we inherently, and I can show you this right here, we're inherently going to have, look at this, an imbalance. Oh shit. Okay, this looks like shit. An imbalance of volume traded at this price within this area. And as you can see, look at this. You see this gap right here? You see how there is there's a less amount of volume that's traded within this area because we established a gap and we could not develop an efficient market to fill this gap, and that's why we have less volume traded within that area. So why does this matter? Why is this important? Well, the market tends to keep doing what it's doing, right? And as you can see, I mean, there are like certain patterns, whether that's us rejecting off this level and then using it to go higher. You can see that. See how we're wicking into it perfectly? See how we keep establishing volume around the level? That makes sense. And if you look at it very closely, you can see, hey, look, there's a gap of volume there. Look, we keep wicking into it, bouncing off of it. You know, we're not consolidating off of it. We're making key swing points off of it. And then, you know, it starts to dilute. We go into the next day and it kind of dissipates and we just stop respecting it. And that's why you really need to apply an element of context so that you know when we're likely to respect it. Why would you take a level from freaking 10 years ago, right? That we respected back in the day, but we're not respecting anymore, right? Understand that. Because when you're looking at volume, you're going to be looking at volume relative to all the other bullcrap imbalances that we have. So, yeah, probably way too much to understand. Probably me going schizo. But let's just cover the trade. So like I said, we have the stupid ass pattern. The way I mark my volume is from where the very last confluence is made. I take the last completed auction from it. I do that to reduce noise, but also to make sure to see if we have a consensus. And as you can see, like, look at this. We have obviously a freaking dump of volume right here. We have a crazy ledge. And look at this. Right at that ledge, we have price bouncing, rejecting, bouncing, rejecting, over and over off of that area. And it shows a significance of that area. It shows that we just cannot establish a significant market there. So why not we freaking take advantage of that bullcrap and run it back to where the market is stable and we actually have a consensus? Like, why don't we take advantage of this inefficiency and bring it back to capitalize, right? Because either way, we know the market is going to move to, well, we know statistically because it just keeps happening, but we know that the market is going to keep moving into these bullcrap fixed ranges because this is where the most people can fill their orders. And the highest number of people are happy. Obviously, if some crazy firm puts a crap ton of orders right here, buy orders, which I don't know why they'd put buy stops. It's just not economically sustainable. They could put a crap ton of buy orders here. Either people are going to freak out or, if there's not enough people freaking out, we're just going to come and fill those orders. Because, the market is first in, first out. We're just trying to fill as much orders as we can, right? And that's the perspective of everyone else participating in this. So, that's cool. I saw that volume profile and that I saw that ledge aligned with my level. And, we have a clean pattern, looks cool. Looks like some I take back in the day when I trade blindly. And then on top of that, having that cool ass clean pattern, we actually do have a significant key time, right? Understand that this new day opening gap is something that damn near everyone can see on their charts. And, inherently it's just a volume imbalance at the end of the day. But also understand that this is a key time. And, we have a consensus at New York Open. I mean, these are important price levels because these are opening times. These are times where people base their orders relative to those key opens. Whether they're trading whatever, dollar cost averaging, martingale, I don't care. So that was that level, and as you can see, boom. All right. Freaking take that and you just run that up. Just run the fuck out of it. You milk the shit out of it. When you're right, why not make as much fucking money as you can when you're right? And it's gonna offset all the times you're wrong. And when you're wrong, bro, just don't post it on IG. No one has to know that shit. Like, let's be so for real. Dude, if you can make significantly, if you can, like, look at this. If you can make 25 times more when you're right than when you're wrong, I mean, do you even need a financial advisor, bro? Do you even need someone to do your taxes, bro? You have so much money at that point, you just go to a third world country, forget all this bullshit. Obviously, it's a little unsustainable to be going for crazy RR like that because, as we increase and go for more and more and more and get more and more greedy, we're going to have less and less and less and less and less of a chance to make more money. Understand that. So that was that trade on Friday. And then I wanted to go over a trade that I kind of missed for kind of a specific reason on Thursday this week. So I know I keep using these goofy ass wicks, and I guess a lot of people don't understand this pattern. But whatever, ICT or whatever, dumb money concepts, they all teach this wick crap. And don't worry, you're gonna get your fair value yet bull crap at the end of this. But yeah, so basically I was looking at the 4-hour time frame, and I saw that we had a significant wick. I mean, this is a cookie cutter good wick. Why is this a cookie cutter good wick? Well, because we take a high, right? So I mean, people can say people can say it takes liquidity. That's not, you can't inherently prove it did that unless you go back and, look at the context and look at Bookmap. The main thing here is that this is a significant wig because we're breaking these highs and we're in an area where we're likely to be a lot more in premium, and obviously you want to short in premium. And like I explained in a previous video to Senkas or whatever that Polish scum was, Dzień dobry if you're watching this, whoever that Polish guy was, when we're in premium and discount, we're going to be inherently predisposed to be at ledges of the bell curve. And those are the most key areas you want to be trading. Please, please, please trade at the freaking statistical inefficiency, the statistical anomalies. Why would you want to trade when statistically it's just the market's just going to be against you? It's just going to, go in your way, not go in your way, and just be completely choppy. Why wouldn't you want to take trades at the most extremes of premium and discount? And I know I'm saying that with knowing that half the people watching this might not even have any prior context or knowledge of volume profile. But I'm just really trying to nail that into your head. Like, look at premium and discount, but look at it from like a volume profile level, and sweeping highs, sweeping lows. Really what you're doing is you're trying to inference, where is the statistical anomaly here? Where can I take advantage of price being miscalculated and being at an extreme that's just away from general consensus? So anyways, it rejects off this PD array, right? So people would say it's significant, and then it takes liquidity. Whatever you want to say. It doesn't actually, well, I don't know if it actually does, but let's just say that. This is what the trade looked like. So it would have been a 10-point stop. And I mean, I don't know how much you target, but I didn't take this trade. I didn't take this trade because two reasons. Number one, even though there actually was I would say this is significant. There was a significant ledge here. And as you can see, I mean, yes, this is a statistical anomaly. And shame on me for not capitalizing this, because now I look at this and this is actually like really, really fucking clean, man. Why didn't I take this? I mean, I was already previously looking at the level. I mean, I was up at 3 in the morning, freaking doing whatever, freaking burning the midnight oil, making myself freaking Polish kielbasa with freaking uh kapusta, which is bro, what is kapusta? Sauerkraut? I know everyone hates sauerkraut. Anyways, just fucking going on another autism rant. Okay, well, the underlying issue here is that I just didn't take it because of a statistical probability, which I can't even say I can verify. So when I go over to my raw 4-hour wick backtesting, based off this pattern alone, just this, I have an insane amount of losses with short trades. More to the point where I genuinely cannot make money shorting. I'm actually predisposed to lose. And that's why I made a refined 4-wick. And that's just me making 4-hour longs off the 0.5 of the wick. But while I have this data, I'm not looking at the underlying problem, okay? It's like this ball analogy that I made before. You have a problem, or you have something that you're noticing, and you want to make an action off of it, but you don't actually know why the underlying problem is happening. And you have to target the root cause to see what actually is affecting this variable that you're noticing. And I have to understand that while I do have this, outlier, and the data is telling me that, oh, you shouldn't short 4-hour wicks. I have to ask myself why, right? I don't necessarily know why, and I've been trying to prove that with volume profile, right? And I guess I could go into my journal, look at, okay, well, let's look at one of these short trades, right? Okay, I don't have any image links, bro. Alright, bro, that's actually such an L. I don't have any fucking image links. Are you serious? Alright, we gotta fix that. Wait. We gotta fix that, because that's fucking terrible. I can't even look at the... Okay. At least I have them numbered. Oh, never mind. I don't have them fucking numbered. Alright, well, let's just look at... I don't have a specific example outlined here. I just want to go back to it. Alright, let's just go back to this. Oh, no, I do have a number. Okay, I'm chilling. Fuck yeah. Let's look at a short. No, these are longs. Fuck this shit. No, fuck that. No, fuck this shit, bro. Are these all longs? Motherfucker, where are the shorts? I know I have shorts. Wait, maybe this is just the refined 4-wick. Oh my... Wait, how did I collect this data? You know what? Fuck it. This is besides the point. I have to look at the underlying problem, right? And the most I've been going, the furthest I've been going to the closest of the most binary of information I can get in the market is the volume profile. And understand that the aggregation of volume right here, we definitely had a steep drop off. You know what? I'd say, dude, let's be so real. That's an extreme of the bell curve. I should have just taken the trade. I mean, I could have just taken it with 2 cons and been happy. I really should have. But, shoulda, coulda, woulda. I saw it in real time, and I was like, damn, you know what? That's so interesting because, like, that definitely is an extreme of the bell curve, but, it's not like an extreme. It's not It's not like we're taking it right here, you know? And that's my problem, bro. I was bamboozled. I was bamboozled by my previous setups. Not saying that they're wrong. I mean, but you know, this one isn't wrong either, right? You know, not everyone's gonna have blue eyes, you know, and be blonde, bro. Like, there's cute Jews out there too that aren't the Aryan race. You know what I mean, bro? Like, baddies come in all shapes and sizes, bro. And it's really about staying at the fundamentals, bro. Small waist, pretty face with a big bank, or some bullshit, right? But at the end of the day, if everyone has a small waist, pretty face, and a big bank, like, bro, pick and choose from there. But don't be missing out on easy money. Don't be missing out on easy cake. Anyways, so yeah, that's a short I could have taken, and you know, I'm always here sitting like a freaking greedy Jew wanting to capitalize more and more money. Hey, why didn't I just fucking take that trade, bro? Well, wait. Let's just see. Okay, let's just, you know what? Not even three cons. Let's just do two cons. Let's see how much money I could have made. And keep in mind, this is on a pro account, so I kid you not, damn near almost all of this is actually withdrawable live funds that I could have actually made. You know, let's just say, and you know, this is a little unrealistic because I probably would close within, you know, this area. There's no way I'd hold for that much and try to make that much money because I'm going for base hits. I want to build a buffer. But let's just see how much I could have withdrew if I just stuck to the basics. And you know what? I didn't make exceptions because I was worried and I was scared and I was acting off emotions instead of acting off, hey, you know what? This is technically right. I'm going with it. Let's just see. Because I'm not even joking when I tell you, you could have held this through like till New York, past New York. Let's just see, bro. Oh yeah, just, you know, just the light. This is a light 8K, you know, or light 9K, and then look at this. Look at this. We respect it again. That's how good of a level it is. We respect it again. Respect it again, and look at this. Dump even fucking lower, bro. I don't know, bro. Just goes to show. It just goes to show. But anyways, yeah. I basically missed out on a pretty fucking amazing trade. Just because I'm basically racist towards my trades, man. That's basically what it is, bro. I'm I'm racist, man. I don't know what to do about it. It's a problem. So aside from that little rant, I hope it got some people somewhere. Stick to the fundamentals. If it's technically right, it's right, bro. There's no denying that. I understand people, you know, there's discretion and people may see certain things differently. And, you know, there's also a statistical, but if you don't know the underlying cause, I don't know, maybe de-risk or something, but don't be completely ashamed to not take it. Always consider it. Okay. I wanted to go into the loss that I took today. And I only took it with two cons, so I lost 200 less dollars than I should have, which, you know, I'm fine with. I was actually supposed to go break even, so I really wasn't supposed to lose any money, but it was way too fast, and as I was hitting my record button, freaking everyone sold off into my stop loss, which is amazing. So the first thing that I saw was this fair value gap right here. And you know, it's cute and whatnot. But the main thing I'm looking at is the CE. And looking at it, I mean, this sucks ass. Like, really, what the fuck was I thinking, low key? Oh, that's why. Never mind. Okay. Still, what? This is fucking Epstein, bro. This isn't a line. This is two ticks off. You know, I really have to be adamant on taking clean setups and not forcing shit just because I see volume profile line with it. Context is, I have, you know, okay, you know what? I'm going to grade this setup in A still, but I'm going to add a note because this trade is forcibly made. I mean, yeah, pressure makes diamonds, but I don't know. I pressed a bunch of carbon together and I just made freaking turds, reeks of sulfur, because I'm looking at this now. I mean, it's just not clean. It's not just something I look on the charts and I immediately see. It's something I forced onto the charts. Freaking forced a narrative, bro. I'm like Biden's LGBTQ agenda over here because I'm trying to force everyone to go queer and cut their genitals off. When, I could be looking at simple alignment like this and not stressing over this dumb shit. Whatever, dude. Taking loss is part of the game. So, I don't know. It was 6 hour order block. I showed that right here. And then it was CE of that 1 hour gap and then the daily open. So 6 hour CE of the 1 hour gap, which, it's not aligned bad. But, it's not really aligned perfect. And it's not like the first thing you see. So I really should have avoided it. But coulda, shoulda, woulda. I don't care. I still took it. And actually, I feel so much better that I took a loss, bro. Believe it or not, it actually is. It's kind of stressful winning every single time because it's like the Grim Reaper's behind your back. When am I going to fucking take a loss, right? The inevitable is going to happen. It's just a matter of time. And it's also just a matter of time before you start hitting some fucking crazy ass banger trades. So that's what that looked like. Oh, so 5 minute order block CE. And the reason I was so adamant on taking this was because from where this is formed, I think it was back here. Because we had a pretty clean ledge right here. See that? I mean, it's not that clean. It really isn't that clean. It's actually just fucking insane is what it is. But I was looking at this ledge right here, and I was thinking we could get some crazy catastrophic move just because of this ledge. But I don't know. I mean, I'm looking at it now. It's really not even that clean. It just really isn't. But it's not bad. I can't say it's not that clean. It's not bad. Anyways, we rejected off of it. If you want, you can see this video. We rejected off of it probably because of the volume profile. Because I was floating in profit. I wanted to move my sell stop break even. Because I thought we were gonna go 101 RR. I think we did actually go 101 RR, but it was just moving so violently. I couldn't look. I didn't even get the chance to move my fucking order. And we just proceeded to dump right through here. But yeah, that was the trade that I lost, and I am actually very happy that I lost. I lost by God's will. And realize every single mistake, even though it's not really that much of a mistake, but every single decision you make, will be either God disciplining you or rewarding you. So yeah, I've been going on for 33 minutes. I don't really know what else there's to talk about with the Da Vinci model, Da Vinci Blade. It makes so much sense. It just makes so much sense. At least it makes so much sense to me. I don't know. I mean, I'm looking at this volume imbalance and actually verifying it with the profile. But I don't know. Next week I'm going to be a lot more locked in. I'm going to be journaling or I'm going to be doing reviews every single day because I think it's ridiculous that I've been such a goy. Oh, also, one more thing. There was this confluence. 705 of the range. But as you can see, it was kind of forcibly put on there. Because when you're taking ranges, you really should be taking something like this. And before this was formed, I was actually looking at this because this was a really fucking clean level. I actually had limits here. This at 0.89 of the range and 0.5 of the wick. But we never got it. Unfortunate. So yeah. That's the predicament we're in. It's not really a predicament, bro. I can take three more 3 mini trades, bro. I still have 1600 of drawdown, bro. I'm so completely fine, bro. There's nothing to be stressed about. In fact, I'm actually kind of happy I took a loss because I can realize, hey, bringing it to the basics is the most important thing. And don't fucking throw a shit ton of fucking confluences and call it an ace setup. When the inherent nature of context is it should come to you easily. It should not be forced. Like, which I should be forced across a bunch of random ass whack ass time frames. You can do that after you have something clean. But actually, I'd say this trade kind of reminds me of shit. Was it here? I don't know. It reminds me of another trade that I actually didn't take. I don't know. I don't even think I'm gonna be able to. It was like last week. Maybe think I'm gonna get the chance to really see it. I mean, I'm recording for 35 minutes. You know what? Fuck it. I can just keep recording. I don't care. I think it was so bad I didn't even document it. Was it this? I don't know. Screw that. Let's go over to the trade that I called out last week and that I didn't take, and it was just break even. I didn't take it because of the way that price was the whole day and the way that we were responding to it. So this is 4-hour IFVGC, and I went on the 5-minute, and this gap perfectly aligned with it. And I thought that was pretty clean, and it is pretty clean. It's actually really fucking clean. And what was even cleaner at the time, well, it wasn't as clean, like it wasn't perfect, but the volume profile looked like this. I was taking it off of last completed auction or whatever. And as you can see, hey, that's a pretty tight ass ledge. That's pretty clean. And if you want to look at price, this is what happened. First of all, the whole day it's just been dookie. Like, I don't even fucking understand. This is so bad. Look at this, bro. Like, what are we doing? I mean, I guess some people make money off that. Well, I can't even read that. We rejected off of it. Well, we didn't even go a full. We didn't even go a full 4R. So it was just. That was just a dookie stain, bro. I didn't even take it, bro. I didn't even feel inclined to lose money on freaking commission fees, bro. I just did not take that shit. Because of the way that we approached it. And the real reason, obviously the way we approached it, but let's quantify that. When we approached it, we didn't refine the current volume profile I was looking at, which was right here, the current ledge that I was looking at. We're actually freaking creating a new ledge, like right here. You see this? And it just completely undermined this one. And it just looked like shit on the profile. That's why I didn't take it. Yeah. Yeah, I wonder if I can find that trade. Because if I can find this trade that I decided to not take, it's very, very much similar to this trade that I kind of could have avoided now that I'm thinking about it. But not really. I don't know. I think it was necessary for me to take that loss. And I don't even think it was that bad of a trade because it was a clean ledge. And it had a reaction. I'm trying to think. It was like this 1 hour gap. No. Some bullshit. Dude, I'm not gonna find this. I'm gonna be so for real. I'm not gonna find this bullshit. I'm just not, bro. It was like some random long trade. I don't know. Let's just forget about it. Basically, look at the charts. Look for the cleanest of setups. Verify them. Don't push for a level. It's just gonna lead you into a bad position. Alright. Yep, that's it.